Uranium friends checking in on a space URA with the weekly here. So weekly bear flag looks like it's starting to confirm. Little bit of some sideways action here, which is the most positive thing we can say. It's riding this 200-day moving average. We call these things moving average squeezes here, so it's kind of a tweezer. So this weekly 12 EMA is acting as resistance. This channel dead, right? So we could actually, well, let me see, just get it on the right thing here. We could actually kill that channel. So that channel is gone. So in the purest sense of the word here, we got a weekly bear flag. It's sideways action now. We're getting a little bit of a moving average squeeze. So not much to glean here, right? So URA, typically it has its 4 to 5 week consolidation periods. This is lasting a bit longer right now, so that in of itself can be a little bit of a red flag. So it's slightly abnormal, but we're still just coming into the base of support. So it's not necessarily horrible. Monthly consolidation began last month, and we're just sideways now. So you can see what URA does. It can just go sideways for quite some time. I'm not expecting anything different here until it tells me otherwise. Monthly 12 EMA and 200-day moving average acting as support. Good deal for that. If we take a look at the daily, just want to see what these fibs. So here's your fib pull because we got a little bit of a pivot here, but it just lost it. So, even these fib pulls at this point are just not the most reliable. I'm leaving them here because it is the pull from that peak in May. So we'll see what these levels, how it reacts with these levels as when it finally gets a bounce. So what can we take that's positive here? Not much. Still sideways action. Still a little bit of a going down. It looks like we're starting to get a little bit of a curl up with the 5 EMA. Now the 5 EMA is an early warning signal. It is not as reliable for me. It's just something that tells me, okay, maybe there's a possibility of a slight change of behavior. So when you see the yellow line cross the blue, it could result in good things. We don't know, but we are building a base here. That's the most important thing. We need to obtain some sort of uptrend back to the bulls. So that's URA at the moment. Not much great to say. Just want to take one look at this 4-hour chart. Yeah, it's searching for a higher low compared to these lows at 28.56. That's what we're looking at right now. And so the 4-hour chart is probably going to be the big tell for us, but it's really just a daily equilibrium, sideways action. Let's first stop the going down, get the sideways, and then we can start working on moving back up and maybe changing a trend here and there. So URNM on the weekly is probably going to be the same deal, right? So yeah, weekly bear flag looking like it's starting to confirm, but sideways action. It's the same type of deal. This, on the other hand, is trading below the 200-day moving average. So the strength here is lighter than URA. Makes some sense as URA will attract more institutional money than URNM will. URA has a much better option chain. The liquidity is far superior. It makes some sense here, right? So, but it's all declining volumes, sideways action. So, and the daily's going to look alike. Yeah, the daily looks the same, right? So sideways action, rejections, 12 EMAs, rejection on 200-day moving average now. Not the best look. The monthly is still holding that 12 EMA on the monthly. Um, if URNM loses that monthly 12 EMA, it's reasonable to assume that URA will follow suit. So, but we'll see. URNJ, the juniors, probably getting smacked. Because that's what happens with the juniors. So here's the weekly, and we're in this big trading band, this volume, this value area that's highlighted by these white boxes. So we don't want to lose this area, that's for sure. That's what we're sitting on now. So trading well below the 200-day moving average. The 12 EMA is about to cross over the 26 EMA, which will be the first time in the history of the name for it to happen. So we don't know how it reacts when that occurs. Moving average is still pushing down here on the juniors, so doesn't look fantastic. But the daily is going to have a very much the same look as the other two ETFs. So that is the deal on the ETFs. Where sideways action is, these are falling knife trades as far as I'm concerned. There's no direction here. It's 50-50, so it's pure gambling, and it's right in the middle of its most recent range. So what do? You don't have a good risk reward scenario. I mean, I do nothing. I'm waiting for something to happen, and nothing's happening, and I don't care because I'll just put money to work somewhere else. That's how it works. All right. CCJ. So CCJ, still a falling knife trade. Anybody who's sitting there doing whatever, I've sold some puts recently. I posted them in, and I just rolled them out. So I collected more premium. It's still $48 puts. I'm at like $2 and something, 38 cents I sold them for. So, I've got it. If I have to get executed on these, I'm going to get it around the high 45s, 46 area, which will bring me into these anchored VWAP from this pivot here into the 200-day moving average. So not horrible in that respect. But as far as CCJ is concerned, the bellwether of the space, it is still going down. All right. We have a weekly stair step. That's been every week. It's a lower high and lower lows, really, except for that. So we've lost the 12 EMA acting as resistance, coming into some support areas here with this anchored VWAP, and we're going to have a little volume node that could help us out here. Otherwise, we could be looking down at 45, mid 45s. And if you get the mid 45s, there's nothing that says you can't get the low 40s there. So just watching. I'll still be doing my put selling plays on this. Um, Maybe did it get an out? See, it hasn't even gotten really any hourly oversold action yet, which is crazy. The only time you got your hourly oversold bounce was over here in June, and it didn't really result in much. So still going down. That's all it's doing. Still continuing on its 4-hour downtrend, still continuing on its daily downtrend. Still, it has yet to even make any sort of confirmation. This is all one straight move. So on the weekly, to confirm the downtrend, it's going to need to do something to this effect, right? So get a bounce wherever it gets a bounce, make the lower high, and then make the lower low. That will confirm the weekly downtrend. This is just straight down. There is no pivots here yet. We're waiting to see what happens there. Dennison on the weekly bear flag, 12 EMA constantly rejecting since, I don't know, early June, right? So constant rejections for 5 weeks straight, 6 weeks straight. Okay. So Dennison, though, look, you can start to think about the behavior of any given stock. And what does it do? Well, it consolidates for a good 5 to 6 to 7 weeks, right? Have we gotten our consolidation? 1, 2, 3, 4, 5, 6 weeks, right? So you start to look at that as the time factor in technical analysis. But to revisit this major value area that it broke out of finally in December, right? Broke out of, they had a little back test and back tested again into 200-day moving average, not unreasonable. So $1.80 with a big volume node over here makes sense. I'm not saying that's going to happen. It wouldn't surprise me. And that's how you got to look at these things. Everybody thinks that it should be moonshot, and that might be due to some really poor Twitter posters, whatever. I don't care. Sideways action daily. It's just caught in a range, caught right in the middle of the range. It's a do nothing for me. Middle of the range, do nothing. Comes down here, this becomes a low risk long opportunity. Comes up here, it becomes a low risk short opportunity. So, anybody who's a bear looking bearish in uranium is going to be defending these levels up here. Anybody who's a bull is going to be defending these levels. It's just that simple. In the middle, nobody's doing anything. You need price action to kind of dictate it there. So anybody who's got any sort of Trading savvy doesn't really mess around when you're in the middle, right smack in the middle of an equilibrium, because it's a pure gamble that way. That's all it is. Encore Energy. Oh, look at that. Okay, let's just look at that. That's a daily trend change right there. So Encore Energy, the weekly doesn't look anything like anything special. Let me just get a zoom in here. Yeah, the weekly doesn't look like anything special here. So let me get this alert over here. It's holding its 200-day moving average, and more importantly, the 50 period exponential moving average, which is this gold line. But yeah, it's a weekly bear flag, and that's just what it is. Monthly consolidation. Last month wiped out like 5 months worth of trading action, 6 months. Because that's what Dennison does, right? So did it here too? Well, didn't do much here. I mean, this is a big wipeout. So it took, but again, monthly 12 EMA is holding here. So when you look at something like CCJ on the monthly, and you're wondering, is it going to hold this monthly 12 EMA? Well, maybe you could just look at Dennison as an example. It's holding right now. And those are the things that you try to look at, the correlations, the big board names. They're going to slightly correlate. This is why I look at these big board names, because they are going to dictate how the rest of the space goes. Nobody's front running the uranium run into the juniors and the shitcoats. They're going to be taking these easily traded, high liquidity option chain names. These will be the signals. That is the weekly, and the daily's going to look like everything else, right? So it's just sideways action, caught in the middle of the range. It's a no action zone for me, in my opinion. That was Dennison. But let's go back to Encore, because Encore has achieved a daily trend change, right? So there are new levels to be working off of here. 381. Let me get the magnet on there and make it perfect. 381. Daily trend change. Low, high, higher, low, higher, high. So of the big board names, Encore is showing some positivity for the space. Near-term producer. A lot of people like this name, but 12 EMA, 200-day moving average, acting as support. First time I've said that so far on this video. Still looking at a weekly bear flag though. So, trend change. Step number one, get trend changes on the shorter term time frame. Got that with Encore. Because Adam Prom, I'll look at it. Yeah, nice rounding bottom there. So looks like a little bit of an accumulation deal, but big wipeout today. Took a bunch of levels out and closed below the 12 EMA. So it's still struggling with that daily 12 EMA. Adam Prom, too much political risk here, right? Geopolitical risk. It is literally a weekly EQ. It's a big wide range, 36 to 47, right? $11 range. Low risk bottom fishes incoming perhaps with Kazatomprom. But still, again, right in the middle of the range. No action zones. So it's just literally just going to have to wait to see something for price action to dictate a change of some sort. What else do we got? I will do the fuel and the builders in a different video. Next gen, weekly, bear flag, 200-day moving average rejection, 50 EMA support, moving average tweezers. I've said it over and over for the past couple of years. When these moving averages stretch out, we need to see them reconcile and bunch up again to make these names whole. And that's what usually happens, and it usually takes time, right? So, basic concept, when there's consolidation, the next move after consolidation is usually continuation of the move that got it there. until key levels start to break. It's not there yet. We're starting to hold here with next gen. Um, it could come back to retest this whole breakout triple top area, and it would still be considered okay. So patience again, right? Middle of the range. Daily EQ, middle of the range. UEC showed some strength today, but not really, I guess, huh? So UEC again is in the middle of the range, but this looks like it's starting to try to do on the daily what Encore did. It looks like it's starting to try to get a daily trend change. And why do I say that? Well, it's bouncing. It's holding this 12 EMA. You're starting to get the 5 curling up. We start to have it here, but still, at the end of the day, trading well below the 200-day moving average. Let's look at the weekly bear flag, confirming without follow through at the moment, right? So 548 becomes a pretty important level, but there's work to do here, and it's slightly showing. And I have said it before. It seemed that UEC and Encore have been trading similarly lately. We just got to see how that plays out. This, the battle is here right now, but again, it's in the middle of this range. So, I mean, you're gambling. Price action is not telling me anything in either direction. The only thing that so far the price action is telling me with anything is Encore, which has made a daily trend change. URG still just getting smoked. Clean rejections off the 12 EMA. We've seen it many times, right? So you need that flip. You need to switch to flip. It's going to be a weekly bear flag. Yep, and still continuing to follow through. Monthly 12 EMA lost a while ago. Um, Nothing points to anything good here at the moment. Just got to watch these daily EQs. So we're looking for signs. Who's the strongest so far? Well, Encore is because they've got a daily trend change. So that Balls Meep guy posted this inverse head and shoulders setup looking thing. Not horrible. I don't know what it's going to do, but I have made many videos on these value areas and where I like to buy, and I bought here. And I've sold up here because this is just what I'm expecting it to do. If it does something different, then I change my strategy. But still, weekly 12 EMA rejections, um, still going down. So the only hope for this name at the moment is this possibility of this weekly inverse head and shoulders. There's nothing to say. I'm not going to play this weekly inverse head and shoulders right now. But if I did, I know what my key level is. It's right there. And I posted that today on Twitter. It's 554. That's the key level that this thing needs to hold. Otherwise, it's still going down, right? Undercuts on it, possible, sure. But this is what it's got to do. It has to hold that right smack in the middle of its equilibrium. It's a no action zone. Comes down to 550 area, becomes a low risk bottom fishing play. And then I decide if I'm going to use this 517 area as my stop area. Let's see how it plays, see how the rest of the sector goes at the time. What is spot doing? Because I haven't looked at this in a long time. I know that the $100 is supposed to be the new floor. Um, Looks like $100 still might be the new ceiling. Sideways, still just pushing down. It's spot price. It's hard to really gauge anything, right? But it is pushing down. It's not holding up. It's really just sideways now. Daily can't even get anything off of it. Monthly bear flag, monthly 12 EMA holding. I've said multiple times that I think there's a possibility of it getting down into the 78 to 80 area. Um, Nothing says that that's not going to happen at this point. So that's the deal. Oh, you at U.UN. Let's see what's going on. Yeah, same deal, right? Weekly, sideways, not horrible. Let's see what this daily looks like. Making this weekly, this daily W formation, right? Double bottom, becoming low risk. So anybody who wants to enter in this trade right now. Clear level to work off of with this 25-20 area, 25 to 20 area, but there's some progress here, right? So it's made it over the 12 EMA. It's done that before. It's got the 5 EMA curl happening, crossover, done that before. We'll see. Give it some time, but it's certainly um, is a defined level here to work off of in this 25 to 2550 range. Pretty defined, where you know you're wrong because then it's who knows what's going to happen there. So, yeah, over and out on this check in.